Good morning. Welcome to another edition of the Big Joel Show. Pretty exciting day today. We've got Casey Crawford in the house. Just came in with a nice glow from a little vacation, which is awesome. Man. Probably very refreshed and ready for a lot of action.
Man. Yeah,
exactly.
A long trip to the North Pole.
Yes, that's exactly right. And Casey's been on the show before. I love having him on. We're going to just talk about the business, talk about all kinds of good things. Casey, just tell everyone when you're a mortgage company. Casey is the CEO, co-founder, founder of Movement Mortgage. Coming in hot out of North Carolina, really South Carolina now, which we're
really South Carolina, but really like homegrown out of D.C., right where we are. That's where I'm born and raised. So
you're right. That's right. So this is a good place for you to come visit. And you started your backstory. I know you went to UVA. Yep. How did you get to mortgage? Because you got the crazy get to mortgage story.
Oh my gosh, yeah. Everyone always asks that one. How'd you go from football to finances? The NFL to the mortgages. So I was playing, went to UVA, graduated. My wife and I got married, and I was playing football for the Carolina Panthers. And I kind of joked that the thing probably most exaggerated about in the locker room at that time was real estate deals, right? So this is 01, 02, 03, 04.
Right.
Everything is up and to the right. Like the only bad deal is when you didn't buy.
Right.
Everybody was coming back to the locker room saying, hey, NFL pay, like pro athlete pay is good, but if you really want to be successful, man, go get into real estate. And so
these guys are all getting licenses.
These guys are all getting. I mean, they're buying investment properties, buying commercial properties, and trading stories about just how well it's going.
Yeah.
So I jumped right in also and started doing hard money lending, started investing in rental properties while I was playing in the league. And so I was the least significant guy on every team I ever played on. I knew pretty quickly at some point that career was going to end, and I was going to have
needed a backup plan.
Needed a backup plan, man. So I'd spend 6 months playing ball, and the 6 months in the off season, you'd work out for 2 or 3 hours a day, and then set up a finance company. Started doing hard money lending and started investing in rental properties.
But you guys started retail. You actually popped Movement open what year?
2008. So I actually filled out my incorporation paperwork July 27th, 2007.
That's right, when everything was crashing. Everything was going down.
Everything was going down, man. I had a joint venture with my partner, Toby Harris, when he was running Nat City, joint ventures for Nat City in 04. In 04, we met. And in 07, he came and told me, said, I think you should start a mortgage company. So, Tobe, why in the world would I do that? You're my partner with Nat City.
Right.
And I think this bank is going to take over what was a great mortgage company, and I don't think we're going to like the culture here anymore. So I think you should go start a new one. And so in July 27th, 2007, we filled out the paperwork and then opened in October of 2008, which, if you remember, Joel, was the month that I think Warren Buffett came out and said our country is on the brink, and I just sunk my entire life savings, all the money I'd made in the NFL and afterwards, and signed all the personal guarantees for an entire $5 million warehouse line of credit with Texas Capital Bank. So,
and as someone that has been there, done that, I know what you had to do to secure that line, especially with well, I guess Toby had experience, but you technically had no mortgage experience, right?
Yeah,
zero.
Not yet.
Toby did,
actually,
but you didn't.
That's
right.
correct.
That's right. Meaning from a resume, because back then they could be a little nicer with the resume. Now they don't care. Show us your money.
Oh yeah,
show us your money, and you get to play ball. So that's arguably, I've been talking a lot, and since
that was the worst time in mortgage history up until this year.
Well, this it's interesting. I was gonna tell. I've been talking to a lot of people, and so since 2001, 2002. With the exception of the blip, which is, call it 7, 8, 9, maybe 7, 8, part of 9, the rates have been dropping and prices have gone up. If you just pull those out.
Yep.
Now, clearly, we don't have that. We've got pretty much very little inventory. Prices are still going up. Doesn't matter what they say in the media.
Yeah.
Rates have gone up, but it's interesting. This to me, not to show my age. I'm 32, by the way. Not to show my age. This is 90s market. This is actually 90s market. The inventory's a little worse, but houses sat for 60 days.
Yeah.
They sat for 60 days. There weren't as many. The hot houses went faster. The other houses sat a little bit. We were doing 2N buy downs, 10, 11, 12 with a 12% note rate, and people were buying houses. Now they were more affordable because everything was lower, so that people could make their payment at that. So that's a difference. But I'm noticing, and I wanted to ask you about this. What you're seeing, because I know you're very plugged in to your company. What are your best people doing? Because what I see is the people succeeding right now you have some people that work at your company that I work with that are knocking the cover off the ball, and they are grinding. They are ground and pound. Yes. They're working like I worked in the night. I mean, they are working.
Yeah.
And is that just a common denominator, just working smart? Because they obviously have better technology, but I'm hearing a lot of wambulances. A lot of people are crying, wah, and then there's these other guys right to the right knocking the cover off the ball.
Well, yeah, I think we've talked about a lot at Movement is stepping back and understanding the context of the game that we're in, right? And I think it's so important. If this market's called it's going to be a $1.5 trillion market. I think NBA keeps revising downward their estimates, so we'll see. But I think the latest I saw is about $1.5 trillion. That's a market you can make money in, right? There's plenty of loans out there. There are plenty of loans out there to go get in a $1.5 trillion market. The problem with the $1.5 trillion market is we're coming off a $4.4 trillion market, just not too long ago.
Right.
And so I think, while this might be similar to markets in the past, what's dissimilar is the amount of capacity our industry created just a short time ago. And so, we had unbelievable amount of capacity that we kind of, expanded to during COVID to be able to fill, the demands that the federal government was putting on us to extend credit to Americans. That's good. That's amazing. We did an amazing job as an industry. And then, rates start going up, and the number of loans out there has shrunk. And so now we had all this extra capacity with less loans going around. And so you wake up and you talk to your sales folks about what do you do? What do you do as a company? What do you do as an individual producer? And I think you are right, Joel, said the guys that are winning are the ones that are drowning out the noise and going out there and picking up market share. What I've been talking to our team about is that now is the time. It's difficult markets like this where you separate the players and the pretenders, period. I mean, adversity is going to separate the players from the pretenders. And the players are out there picking up market share. And you're seeing it with top producers. You're seeing it with companies. More companies are aggregating market share kind of in that top 10%.
Have you seen any stats on, I know in the first quarter of this year, I think 60,000 loan officers turned in their licenses. Yeah. Have you seen any second quarter stats yet? I mean, I know you can see within your own company, but
haven't seen the second quarter stats. But I mean, this is just what we're seeing across the industry, right? And it's good. I mean, it's good.
More business for the people that are here, which is incredible.
Pros, the companies that are committed to this space. We're finding out who they are. And look, there were some pretenders in our space too, right? There were some big name kind of pretenders that were making a splash during COVID, coming in and saying they're going to revolutionize the way the industry was done and things, and they're gone. They're gone. But the true committed mortgage professionals, the true committed mortgage companies are still here, and they're actually picking up market share in and through this market.
Yeah. And that's the big piece. That's what I'm telling everyone. Just head down, grind forward. What you just saw was fake. That was unreal. No one has ever seen, even at the peak of the 80-20 lie docs. Remember when you get in a house for $500, you breathe on the mirror? You were literally a teacher. How much do you make? $300,000. Okay, breathe on the mirror and you got a loan. There were a lot of loans done during that time.
A lot of loans done.
But there were more loans done during COVID.
Yeah.
So it eclipsed that. Yeah. And it's amazing, but people are literally still, I'm watching them sit on their hands and I'm watching this thing grow. Before you could have these people hanging in, closing 2, 3, 4 loans a month, and then there was a guy closing 10. Now the guy closing 10 is closing 13, and the other guy's closing 1.
Yes.
So it's going like this, and then you guys are left looking at this, hate to ever use the word head count because it's a horrible word, especially a horrible word for someone like you because I know how personable you are, meaning everyone is a person, not a number to you. It's brutal. And it's brutal to tell a loan officer, hey man, look, either you got to go or no, you don't get to use an LOA anymore. Wait, what do you mean? Yeah. I always use an LOA. You're closing 1 loan a month. Yeah. What do you want? I can't afford to. If you want to stay here and you want to keep your laptop and everything, I can't. You guys got to share. Yeah. Yeah. And as a company, you guys clearly look. I think all of the big IMBs. I think there's 5 of you guys, really big dog independent mortgage bankers, really, that are not bank affiliated. Right. All you guys, everyone has their thing. Everyone has their thing. If there was one perfect company, everyone worked there, right? You'd have 50,000 loan officers in one company if there's a perfect company. Right. But so everybody's got their thing, and you guys are known for what you do in the community, for giving back, for trying to make everything personable. But I know you guys, and I know that you guys are about mortgages right now, all about mortgages. And I'd love to hear you talk about that a little bit, because you do so much in the community. We could talk about that for 5 hours. Somebody just Google you right now and whoop, that's all going to come up. But, what are you guys doing to march forward? I know you have a big tech initiative, but what are you doing to just march forward, head down, be standing when the dust settles, which I know you guys will be standing when the dust settles, and be ready to do what you said, which is take market share in a very aggressive way, which is what should be going on, I think.
Yeah, well, I mean, we're really excited. We've taken 40% market share in the last 12 months. So we've picked up 40% market share in 12 months. That's a pretty good growth clip.
That's
so
awesome.
We're really excited about that. We've been adding great loan officers, and helping our current loan officers continue to do more loans. I think, Joel, one of the things we're really trying to talk with our guys about right now is, just knowing who you are, right? Knowing who you are. You remember Reggie White? Remember Reggie White, Minister of Defense? So I grew up in D.C., right? So I grew up watching the Redskins play. So I was, little boy.
I watched them play in Philadelphia all the time.
Yeah, we got RFK Stadium, and that was a big deal. My dad would always find a way.
He was a menace, that guy.
Yes. He's the Eagles, the end, right? I'm watching like Jim Lachey, our left hand. He, that guy was, and Reggie just pick him up and go toss him somewhere. And they told me when you first got to the NFL, one of the things they said is, hey, make sure you don't get too impressed, right? Some of you guys grew up watching these guys. Okay, like don't get too impressed. You're now on the team with your former.
Don't freeze up.
Right.
Keep playing.
Yeah, act like you belong here.
Right.
Well, that was like fine, and I did that pretty well with most guys until the first day of preseason practice, and the Minister of Defense comes walking onto Panthers practice field. It's his 17th year in the league, and I'd like watched this guy just destroy all of my childhood heroes, right? So he was kind of like bigger than life and untouchable. And it was like this incredible privilege to actually get to play with Reggie for a season, get to know him. And, he was such a guy, was like filled with wisdom, just like filled with wisdom. I remember one of the first things he'd said to the team, is
that his last stop? Said the last team he played on?
Yes,
okay.
last stop.
Yep.
He actually passed away tragically a couple years later in Carolina. And he was kind of in that mentoring stage, right? Where he's trying to pour back in. And he was a great player, but he's also, at that point, he didn't have anything left to prove. All-time sack leader, defensive player of the year, all that kind of thing. And I said, we won our first game. He kind of comes down the locker room and says, guys, one thing, and Reggie talked like, one thing I've learned, he had this real raspy voice. So one thing I've learned, never pay too much attention to the papers, right? Because when you win, you're going to think you're better than you are, okay? And when you lose and you read that same article, you're going to think you're worse than you are. So know who you are each and every day. Go out there, execute with what you can do with the God-given abilities, talents you have, the opportunities that are in front of you, and rest in that. Rest in that. Don't spend too much time reading the paper. I think a lot of folks in our industry spend a lot of time reading their own clippings. In 20, 21, 22, I'm a $100 million producer. I'm a $200 million producer. I'm a 500, whatever, right? No, you're in a wild market. You're in a wildly, the largest, fastest, exploding market the industry has ever had. And then they come off of that, and they're just crushed. They're crushed. My business has been cut in half.
Cut in half.
Yeah,
that was generous, by the way.
200 million to 100
by three quarters.
Right?
Yeah, most of those guys.
70%, right?
Yeah.
Cut. And I think we just spent a lot of time helping guys realize. First of all, I believe, man, this is the best industry in the world. The incredible privilege we have of being in the mortgage industry, where we get to help people structure the largest debt on their balance sheet with the largest asset in most of their personal balance sheets, and think through how they're going to create a home and a place of security and longevity for their family. It's an amazing privilege. You get to walk, you see all their financial mistakes, you see their hopes and dreams. We get to counsel them through that. So that's just starting right there. It's incredible. And the amount of income that is available for people to make in this industry, it's wild. I mean, you coach folks in all kinds of industries, right? We were talking about a few of them today.
Yeah.
Just really amazing industries. And I tell you guys, this is one with just uncapped. You can make more than the left tackle for the Carolina Panthers in this industry. We have a lot of guys who do that, and that is amazing. That's amazing.
It's the guy that would have been the produce manager at wherever, Harris
and
Teeter.
I put myself in that category.
Is a loan officer.
Right.
No,
absolutely.
It is, and it's for those guys, it's go time, but they're sitting. I can't. They're sitting on their hands. I get phone calls all the time. Hey Joel, I heard about you. Whatever. I want to work with you. I'm like, I don't think you do. And they'll say no. I said, I really don't think you do.
They don't love the call
because to model match with me.
Yes.
If there's a wall, I literally expect you not even to say a word, and be on the other side of the wall, and be like, yo, I'm over here.
Yeah.
What do I do next? Not ponder the wall,
Yeah.
which is what these guys are doing. They're pondering the wall. Okay, I've been doing, I was closing this. They bought an Airbnb. Then, of course, that rule changed. Now it's 28-day minimums. They're sucking on that. They can't pay for that. There's an extra Corvette in the driveway. You know what I mean? These guys, the smart guys, the 2005 guys, save their money.
Yes.
Okay? The COVID guys, most of them did not save their money. So they're sitting around going, what do I do? I was making, X per month, and now I'm making a tenth of X. Yeah. And on top of it, what I'm trying to explain to them is, guys, these other guys you're competing against, these guys are doubling and tripling down.
Yes.
These guys are looking to take you out. Like, you're going to be on their team if you're lucky. You're gone. Yep. This guy is going to stamp you out. And if that guy's at a good company, like your company, then you got a real problem in this market, because we're only just starting to see the phone calls. I'm sure you're getting them right now, where you've got warehouse line calls on some of these guys where they need to put more money in, and they're thinking, let's see if I can sell myself right now, meaning the little guys, to a big guy like you all, because if they've saved that money, a lot of them don't want to invest that money back in, because they don't know if they're going to get it back out. And the warehouse lenders are going, no, liquidity, right? I mean, I don't know how many of those calls you're getting, but I'm sure you're getting them right now. Yeah. And there's good loan officers that work at those companies, and it is, I think the big are actually going to get bigger.
Yep.
And I mean big and bad and nasty big. Yep. The company and the loan officers at the company. I see it within your company with certain people. I'm just watching them go, whoop, just separate away. They're just separating away.
Yeah. Well, you're seeing it with some new people too, which is fun, right? Because some of the ones I love, we have a new loan officer, 4 years in the business. She's she already qualified for President's Club last month. This is her 4th year. So
what market?
Like Atlanta.
Atlanta, nice.
Yeah, Atlanta. And just no one told her she wasn't supposed to have a record year this year. She just didn't listen to it. Like wasn't aware that
they don't know any difference.
And just
what are you guys talking about? Yeah. What do you mean, right?
Putting their systems in place, working their system, getting a coach, doing all the right things, and absolutely cresting. I mean, just cresting in and through this market. And so I really agree with you, man. It's so much about what your perspective is, and are you willing to get up and go to work? And that's what I love about this industry. I mean, this industry rewards hard work. It rewards entrepreneurialism. And the cream can rise to the top. The best expose themselves. I mean, and we're going to find out, like in this market, and through adversity. And I agree with you. I think that the best companies and the best loan officers are going to take disproportionate amounts of market share in and through this time. And so it's tough. It's tough. No one likes adversity. I mean, no one likes that hard workout. No one likes that grinding game. But you find out like who's really committed, who the professionals are.
And it's as people tap out, then you talk about the industry in general. Some of these positions, like the hardest positions to fill, like a producing branch leader, it's a very hard position to fill because it's got to be a guy that's sincerely interested in helping people. For a lot of times, not a lot of comp, and they got to be doing their own loans as well. And those guys are just disappearing. It's like an endangered species. Finding those guys, and everyone's trying to find those guys. And I'm, from my perspective, I'm watching, and I know at the core, you have to have those bodies. That's the most important body. The guy in the field, in the dirt. Yeah. Loan officer's got a problem, right there. Like there's no, we know loan officers have problems all day, every day. Even the best ones do. And if someone's not there, you guys have done a good job of finding those bodies. What are you doing to your vision for? Do you think we're going to look like this through December, or you think we're going to look like this through March?
So this is one of my core beliefs and core perspectives.
Yeah.
Goals. I don't guess. Don't guess and don't care.
Don't guess, don't care. So your advice to people watching this is forget about it. Head down. This is the market. The market is the market. Whether rates go up or the rates go down, it doesn't matter.
Absolutely.
It's not changing what you're doing every day.
Structure your business to win today. Don't structure your, I think hope is a bad strategy.
The guy's saying, I'll refi you later. Just take
or the branch manager or the loan officer saying, oh, I'm going to hang on to 2 extra LOAs because, I think by Christmas the market's going to turn. And it doesn't make sense for my business today, but it's going to make sense for my business maybe in 6 months. So, man, you structure your business to win in this market. And if the market turns, it gets better, fantastic, right? Scale it right back up. Do what you need to do. But make sure you are structuring your costs, your expenses, and your business to win in this market. 1.5 trillion is plenty of loans. There's plenty of loans to make a living, do really, really well out there. But you got to be one to structure your business to win in this market. And that I think is a lot of hard decisions a lot of folks are unwilling to make sometimes. And that's where I think hope gets dangerous, is when people don't structure their business to win today, and they hope things are going to turn at some point in the future.
Yeah, and then these guys that are knocking the cover off the ball, these loan officers that are still cranking, they're watching you guys do what you got to do, which is get lean, get smart. You're going to lose. Everyone, like you guys all know, you're losing money, and it's totally fine. I mean, you understand it's a calculated loss or whatever you're investing, and you're investing in the future. And these guys are so positive and so busy. You know what they're talking about? All right, man. What's going to happen when I close 40 loans? Is ops going to be able to handle it? They're so positive, which is a great. I love when they say it. I'm like, don't worry about that. Yeah. I'm like, trust me. You put 40 loans up or 50 loans up for the month, your company, those are going to close. Yeah. Don't worry about it, because everyone else is still closing 5. So you don't worry about it. They'll just move bodies around, to make sure it gets done. So stay the course no matter what. Tell me what else. Give me advice. I mean, people are yearning for. I mean, they're literally, Casey, sitting. I'm in the market every week somewhere. I'm usually doing some type of agent presentation somewhere. So I'm in front of agents, but I'm with one of my one-on-one clients, and they're all super successful. They're all big dog guys. These agents are telling me they're getting between 30 and 35 phone calls a day from loan officers. A day from loan officers. Asking stupid questions and saying dumb things. And they're like, Joel, should I change my phone number? What should I do? I'm like, just start blocking the numbers. They're like, it's incredible. And I'm talking to these guys. I'm like, guys, well, you can't get a little more creative than that? How about stand up, turn around, take a look at your chair. If it looks like an imprint of your ass, you got a problem. Get up and go do something. You're not getting anywhere on the phone. Are you seeing your best people out? Are they out? Are they operating almost as ad hoc psychologists for the agents? No, these agents they're writing 27 offers to get one house. Man, they're working, and the loan officer's complaining, "Oh, I had to write 28 lender letters." I'm like, "Yeah, that's 28 more than someone else wrote. So just keep writing them, to get people in." What are they just mobilized, your best people? Are they out? Are they on the street?
They are. I mean, and everything you said. I mean, I think they're partners. They're partners. And I'd say I got one of the world's greatest partners, Toby Harris. Toby's, Tobe.
Yeah.
If you know Tobe, you love Tobe. Yeah. Tobe's in his 70s. He is absolute warrior. Called me from the hospital bed a few weeks ago. Just all fired up to get out to recruit. Yeah. I'll be out of here today. Go recruiting dinner. He's a warrior. And I think when you got a partner like that, man, it gives you courage, gives you strength through hard times. And I've encouraged our loan officers. You talk about your realtor partners, but are you? Are you really a partner to them? Because sometimes it does. It means you call them and encourage them, right? You're not calling them for something. You want something for them, not from them.
That's right. How you doing?
Yeah. What can you give to them, not ask from them? Right? Like, they know you want a deal. They know you're hoping to qualify one of their buyers. They know what can you do for them, man. You want to go do an open house with them. You want to go do a seminar on how to build wealth and investing in real estate. What can you do for them, man, to help?
These guys aren't doing that. Yeah. For some reason, someone told them to make videos. Yeah. They're hanging out making videos that no one's watching. By the way, they're busy making videos. I mean, it's amazing.
Yeah, I think you got to get creative though. I really do. I got a buddy. Stratos Lambos, right? Stratos, Greek, believe it or not, and owns a bunch of Greek restaurants in Charlotte. Amazing. We ate there last night. They're fantastic food. And so during COVID, it crushed him, right? I mean, COVID happened. If you were in the restaurant, I know you're a food.
Was he doing carry out, or he got crushed?
Everyone had to pivot to carry out, right? I mean, it wasn't a choice. It was kind of the only option.
Unless you're in Florida where there was no COVID.
Right, we were not. We were in North Carolina here, right? So here's what I love that Stratos did, though. Stratos, he goes, man, what do people need right now? They're locked up in their houses. He goes, man, they just miss community. They miss seeing each other. They miss, man, just being outside and breathing fresh air. So Stratos takes his whole parking lot and does an outdoor live music on Thursday, Friday, and Saturday night. Hired some guys, everything's outside.
Just right in the middle of masked up COVID.
Right there. And man, the whole community's pulling into this parking lot, just to listen to some live music or sit in the back of pickup trucks. People got their masks on, doing whatever. And, what's he start doing? He saw a little bit of food. He saw a little bit of food out there. Yeah. And all of a sudden people are like, oh man, I hadn't even tried this place. And, within a few weeks, the guy has a line out the door selling food, and his sales were really, maintained all the way through COVID. He didn't start with, hey man, can I sell you some food? He started with, hey, what it is that you need? How can I serve you? How can I give you something you need, not something I want you to buy from me? right? And he thought about their need, and he did an outdoor music festival, right? And then that turned into selling a whole lot of amazing food that he had. And I think about that with our loan officers, man. What is it that we can be doing for our realtor partners, right? To love them, to serve them, to care for them during this time, and help them, have something encouraging to talk about with their buyers, their sellers, because it's really tough. It's really tough, and this is actually when you need partners more, right? And we talk a lot in Moving about, that the world didn't need one more mortgage bank. And I can tell you that our realtors don't need one more phone call from a lender, right? They don't. They
35 is enough in a day.
35 a day is like 30.
Yeah.
This 37th isn't going to
Right.
magically transform their business. But what can you bring of unique value to them? And that's where we've been talking a lot about our impact lending concept. That we've kind of put a stake in the ground that we're going to be join this impact lending movement, where we're going to commit at least 10% of our profits back out in the communities that we serve, love and serve our communities by reinvesting in them to love the most marginalized kiddos in those communities. We're building a series of 100 charter schools for kids born to poverty that right now have, many cities less than a 2% chance of breaking that cycle in their lifetime. And we know we can help them change that.
Mainly, where are the schools right now? Mainly North Carolina, South Carolina?
Yeah, opening in Atlanta in 2025, and then kind of going down the East Coast. And we're having other networks come in and kind of replicate what we're doing. But the important thing, I think, about this concept, though, Joel, when we're talking to our realtor partners and for our loan officers, is what can you be bringing to the table that's different? We have every city in America has plenty of lenders, plenty. They don't probably need one more mortgage bank, but people do need a bigger, better story to tell. And so when our realtors are out there looking for some way to differentiate themselves with their clients, we're trying to give them an option to say 77% of consumers look for a values-aligned vendor. Like they would like to do business with someone that shares their values, is pouring into investing in their community in a meaningful way. I don't know if you saw Patagonia, the founder of Patagonia, gave Patagonia back to the world.
Right. I did see that. I read that article. Yeah, it was a great article.
Gave all the equity in the company back to a foundation that was going to reinvest in the planet, right? In a healthy planet. He said, hey, fundamentally, we're a company.
It's an amazing story.
Enjoying the outdoors.
Right.
And so sales tripled. Sales went through because people are like, man, I want to buy outdoor gear from a company that's actually pouring back into the outdoors. Something I love and value. And so we talked to our realtor partners about that. Anyone out there, any bank out there can get you more. We sell a commodity. We literally sell a commodity. It's no better than Wells Fargo. We sell an experience. It's a commodity, though, the product that we sell. So what can we do for our realtor partners to actually bring some differentiated value? And so we've been talking about how'd you like to partner with an impact lender? Let your clients know that every time they close a transaction, man, we're pouring back into this community, loving and serving the most marginalized kiddos. And that has been a really fun concept for our loan officers to go and have something new, unique, and differentiating to talk to their realtor partners about.
It's an old concept that people used to talk about years ago that you didn't need during COVID, but it's the old, the acronym USP, unique selling proposition.
Yes. Yeah.
And it's really not selling. I don't think you can sell anything to anyone. I think they buy when they're ready to buy, and you need to have a good product personally. But it's the acronym unique selling proposition is interesting. We just call it a unique proposition. Leave selling out, meaning being unique. And it's a good message for anyone listening to this. It doesn't matter who they work for. What makes you unique?
Yes.
Because I say this all the time. You might have heard me say it before. Rate and points are the first page of a 100-page book.
Yeah.
There's 99 pages of all the other stuff of why you're coming to me or coming to this specific lender, which is basically what you just said in a nutshell. With the commodity piece, how really different are everyone's rates? Sometimes there's product differences with credit unions and things like that, but the actual price. Come on, how different really is it? I mean, you guys are all putting everything the same place.
Mm-hmm.
Maybe there's some different things with jumbo investors, but the reality of it is it's conforming, conventional, FHA, VA. You guys should all be pretty close all the time.
That's right.
So how does the consumer, the customer, how do they choose? How do they think?
Unique value to their life too, right? Like none of us, I don't think any of us want to be replicates. I think, man, Joe, you're one of the most unique guys out there. I love when the phone rings, man, because it's always a totally different conversation. Sometimes you have a lot of the same kind of combos. When I pick the phone up when you're calling, there's energy. I know there's going to be energy, there's going to be juice, and there's something of value. You don't call me just to kind of chit chat or talk about the weather. You got something important to talk about, and it's something impactful, and you always have a lot of energy, man. I love it. So I'm looking forward to. And so I think, all of us as lenders or as companies, what's the unique thing that we're doing, kind of stamp and imprint we're going to leave in the world? And with our realtors out there, man, don't just be a replicate, one more rate and point guy calling up, the realtor. Let's think about like a unique value that we can bring. Again, my buddy Stratos, right? There are 1,000 restaurants in town. You can go eat anywhere. You can get fed anywhere. A lot of good places. He figured out a unique value to bring to the community that others weren't doing. And man, because he figured out that unique value, man, he sold a lot more food than the rest of the restaurants.
Yeah, and when you're already good, this is what I tell people: when you're already good, they already know you're good.
Yeah,
they already know you're a good loan officer. Put the cherry on top. It's over.
Excellence to me, excellence is the entry ticket, right? That's table stakes. That is bare minimum. Like,
right.
Excellence.
That's assumed.
Assumed. I mean, and at this point in the market, mediocrity's been weeded out. Mediocrity's been weeded out, right? The low producing loan officers, you mentioned 60,000, right? Get out in the first quarter. We'll see how many get out in the second quarter. The mediocrity and low producers have been weeded out. So like what you're left with are professionals, right? So everybody's pretty good. So now how is it that you differentiate yourself? How is it that you bring value to your realtor partners amongst a field of good trained professionals?
And what's happened is there's a halogen on it because as all of you guys have leaned out, as you should have, because you went up to capacity, I mean, a lot of capacity, you've leaned out. A lot of these people that were backstops for the unprofessional loan officers are not there anymore.
Yeah.
So what's happening is the loan officer that isn't working hard, doesn't know what they're doing, they're originating a loan, and now this loan is not going to the backstop body. Like the LOA is maybe gone, who really is the one that knew what they were doing anyway. And now it's going right into underwriting and imploding. And what some of the best loan officers are telling me right now in the market is they're getting 2-3 saves a week.
Oh, yeah.
And they're looking at these loans and they're going, this isn't even a save. This loan officer clearly didn't know what they were doing. And so the opportunity to meet a new potential partner through a save and then show them how unique you are is the highest opportunity I've ever seen. People go, oh, I can't get agents on the phone. I can't do this. Like, no, you're missing it. It's reverse.
Yes.
It's and what the agents are saying is the agents are done using the loan officer, just because they like their kids go to the same school.
Yeah.
The guy that closes everything late, or they're done. They're like, no, I'm done.
Yeah.
I'd rather send everything to this guy that knows what he's doing, or lady, woman or man, that knows what they're doing, works for a great company, and that's where I want it. And it's so important. Every deal is so important. I think that opportunity that you're talking about, most loan officers would argue, what do you mean opportunity, Joel? There's 2 houses on the market. I look at it glass half full. No. Big opportunity. You should be so aggressive right now. People laugh at me. I mean, like firing off the line, aggressive, like the first play of the game when I was coaching Pee Wee football. I would tell
Coach Joel.
I would tell the kids with the parents not around, I'd back them up and I'd be like, guys, I don't care if they score on us on the first play, if we're on D. I don't care if they score on us on the first play. I don't care. They can go 50 yards. I don't care. I want you to hit them so hard. When they come back up to the line, they're like, so then we'll just play the rest of the game. And they'd all look at me and I go, are we all on the same page right now? I want you to come out, and if we're on offense, I don't even care. Just hand the ball off through the 2-hole. I don't care. I want you to fire out and murder somebody. And that's the kind of market we're in right now. And if you're playing ball like that, if that's your thought process, you're going to win.
I'll tell you, I'll make a plug for coaches too, Joel. Really, not because you're a coach, but I just so deeply believe in it. I think every one of us needs it. I've had a coach my entire life. Right? At no time in my life do I remember not having a coach, and at no time did it not make me better. Even a bad coach made me better. Right? Like, even a bad coach made you better.
Right.
They're yelling at you, they're screaming at you. Sometimes it's in the most unhelpful ways. And I could sit and think about all the things I would do better at some point in leadership with a bad coach. But in markets like this, I think it's even more critical. The big mistake we see people make, they stop investing in themselves, and they stop investing in coaching, things like that. And now's the time more than ever that you need a coach, because you need somebody to kick you in the butt. You need somebody to hold you.
They don't understand the investment. They don't understand making that investment. The investment that you and other people like you that own companies like you are making every single day, when you could easily cut this, cut that. Like, no, leave that. That's fine. I know we're taking a loss on that. Don't care. Let's go, because we have to keep reinvesting back.
You got to reinvest in your people, and you have to invest in yourself during difficult times like this.
Anyway, so I know you got to get to another meeting. Always exciting having you in here. What would your just final words to be? Words for people watching. People love watching your podcast because you're an exciting. You're always on fire. What you're saying about me, you're the same person. What would you say to just pump up the whole industry? Like to just let's Go guys. I mean, I'm saying, hey, look, if you don't want to do this,
Yeah.
literally, please turn in your license and get out of the way. Because just get out of the way for the rest of us that really want to make this happen. Because, by the way, I agree with you.
Yeah.
It's one of the greatest businesses, careers forever. Relationship always trumps technology. We can have a ton of AI and all kinds of cool technology. You guys have a huge thing going on right now with tech. You guys are going to have a great tech in a year, whatever she's done. You're going to have a great tech. And the bottom line is it doesn't matter because that human piece, when you're in an emotional transaction, like getting a mortgage, a very emotional transaction, you don't just want to talk to a bot.
Yeah.
You know what I mean? So for me, I just want people to get out of the way. If you really don't want to do this, if you're hanging around to do refis, please quit. Move out of the way. But if you're gonna, but if you're gonna
can I
stay
finish with not a please quit.
No, but if you're gonna
I'll let
stay,
you go with the
if you're
please
gonna
quit.
stay, no, I mean, what? Give us just some pearls. There's a lot of great stuff in here, and I'll get you out of here because I know you got to go.
Absolutely. Well, and so you know, you talked about those that are getting out and they get out. So I'm gonna speak to those that are staying in.
Yeah, exactly.
Those that are staying in. And first of all, I'd want you to know, you're doing better than you think you are right now. You're doing better than you think you are. It is the toughest market in the history of the mortgage-backed security. Okay, this is the largest drop-off our industry has ever seen. It's never been. You are living through like the rough times of old. Like there's no old timer that
The
can
Great
tell you,
Depression is going on right now.
We're in the middle of it, okay?
Right.
And you're still in there. You're in there. You're hanging on. You're doing it. You're making it. You are like at the epicenter. I think it's not getting worse than it is now. You're at the worst point in mortgage-backed security industry, and you're in there. You're hanging in there. So like, give yourself a pat on the back. You're hanging in there. You're doing better than you think you are. I think you are picking up more market share than you realize. You're sowing seeds today that you will reap the harvest from as the market turns. Okay. Don't fixate on when the market is going to turn. Fixate on the sowing the seeds. Planting the seeds, planting the seeds, planting the seeds. Encourage yourself that, man, those relationships that you're building today that are difficult, those relationships that are getting left by all those loan officers that are getting out of the business, the community, the realtors, the accountants, the attorneys, the builders, the veteran administration, just your group, your social network that follows you on Facebook. There are less mortgage professionals for them to look to. And you are picking up market share right now, even though you might not be doing loans for those folks. You're picking up influence, you're picking up market share just by staying in it. And the third thing I'd say is, man, this business has the power to impact and transform lives almost unlike any I've seen. And we get to sit at one of the largest drivers of the largest economy in the world. And we sit at the epicenter of it. Like individual property rights are what this country was founded upon. It is critically important that those of us who are helping Americans secure the financing for those individual properties, man, that we're people of integrity, that we approach our profession with excellence, and that we love and serve our fellow citizens in a way that we never have a black eye like our industry look back on us on from that 03, 04, 05 kind of time frame. Some of those loans you mentioned.
Those are some good shiners.
Yeah. We have to be exemplars. We have to be leaders. We have to be people that are respected in the community because of the way we help people use their home to create an asset, right, in their life, create stability for their families, create wealth in their families, and fundamentally change the economy we have in the U.S., right? We have a massive debt problem in this nation, right? But we get to kind of at an individual citizen level help our fellow citizens think about how to use this incredible asset to build wealth, reduce their debt. And I think that makes our nation stronger. When our nation's stronger, man, the world's doing better. So you're doing better than you think you are. You're at the epicenter of an amazingly impactful industry that's going to serve you incredibly well financially, your family. I know of no other industry that can do this so that pervasively, where it has that much opportunity in it. And it's critical for our nation, guys. It's critical for our nation that we do this, do it well, and succeed, and really are looked to by our fellow citizens as valuable, I think, professionals. Not people that did tough loans that should never have been done, right? Which is still the hangover our industry has a little bit.
I think
there's an opportunity
just to translate, because it's an incredible message you just gave. However many loans you closed last month, you're good. Because if you closed any loans, any purchase loans, referred by agents, referred by people in the market, you're doing good. And don't compare it to, I only closed 4 loans. I'm used to closing 10. Yeah. No, You may not compare closing 10 loans when the rates are 2 and 7/8. You may not compare that. You may not compare the different inventory. You may not compare that. And I'll tell you, I love the message. It's almost like I teed it up, and I didn't, by the way, everyone. I did not tee that up. It's a really good motivational message because people get hung up on this. Casey, they get hung up on, I give my financial planner 10 grand a month, whatever. And I'm like, okay, so? Well, I can't do that anymore. I'm like, okay, so? Yeah. So you did that for 3 years in a row. You're good. You can take a year off.
Yes.
I said, dude, you're good, man. Yes. It's fine. You can start that up a year from now. Don't get all up in your head. Oh, I only closed 4 loans. Yeah, that's 3 loans more than most everyone else. So get over it. I mean, it's really very impactful message, to end with.
But I had an investment banker say this, and I think it's good to think about because like a lot of public mortgage companies out there, right? And he said, mortgage companies, it's really tough for mortgage companies to be public because the market doesn't understand them, right? When the market's bad, they look too bad, right? And the market's good, they almost look too good.
Right.
You have to look at a mortgage company. I think a mortgage professional needs to think about their career the same way. It's kind of my Reggie White story, right? When the market's good, you're probably not as good as the market is. And when the market's bad, you're definitely not as bad as the market is, right? But you look at your career, your 5-year earnings, right, over a couple cycles, and you go, wow. Yeah.
That's what I do. Yeah. I make them go 18, 19, 20, 21, 22, and then 6 months of 23. Divide by 56 or however many months, 66.
You happy? You like that number?
That's your income,
right?
And they're like, "Oh," I'm like,
"That's right." And I think
that's your income.
I really think it's going up. Again, I think they're picking up more market share, and they'll reap the harvest of those seeds they're sowing today in future markets when the market comes back. Right? Those relationships will spit out a lot more referrals.
Long as they hang. Yep. Everyone, this is another episode of the Big Joel Show with Casey Crawford, owner, CEO, chief cook and bottle washer at Movement Mortgage. Love having him here. Thanks for watching. Thank you, Casey.
Thanks, brother.